What is going on, everybody? And in this video, we are providing you a state of the market and stock picks for July 15th, 2022. So if that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the day in the week ahead in this glorious market that we are in 2022. Yes, sir. I tell you what, it's been quite interesting nonetheless. And the fact that at this level, uh, the market is extremely sensitive to the Fed futures. Before we went into core CPI, the Fed was not, the market wasn't pricing in, the Fed futures weren't pricing in a 100-point basis move. Yesterday, I think it peaked out at, I think it went pretty high, at least over 65%. Chance that there was going to be a 100-point basis move. Then you got two Fed members coming out today saying, no, we're only doing 75. And so the market started to rip back up. Being said, the minimum they're talking about is 75-point basis move minimum. That has nothing to do with the rest of the data that's getting ready to about to come out with all these other companies. Speaking of which, the chips, TCM semiconductors did come out and they did very well. They actually upped their forward guidance, which was interesting. Supply is catching up for them, so that is good. The demand's still there as of right now. As far as everything else, like JPM banks, JPM did absolutely horrible. They missed badly. Morgan, I think it was Morgan Stanley, actually did really bad as well. They lost about, I believe it was about 28% of their profits. That's just showing you the weakness in the market, right? There is inflation. It is changing around, and the last report is kind of showing that it's not the same stuff that's really increasing in inflation. And we have to understand that oil still plays a huge part in all this stuff because all your supply is being carted around by vehicles, right? The majority of the vehicles in the world, you may live in the Western world and maybe, the administration could push everybody to go get a Tesla and hands everybody out money to go buy a Tesla. And then people just start driving Teslas. That's great. But you have the rest of the world that doesn't have that. And they have to use gas-powered vehicles to ship supplies. So with all that being said, that is going to keep the stranglehold of inflation up. It did this one, and I'm sure it will on the next one. This is one thing they were talking about, that we may kind of top out, and something I'm kind of thinking is we could potentially top out on the next report. Very likely, I think it wouldn't also surprise me if we come over that. Because you are starting to come towards the tail end of summer, even though things are still inflated. So again, I think we could get one more really heavy core inflation report. And then also past that, I think we have the potential to start tapering off and hitting a peak and start coming back down. But again, and I feel it's more towards you start getting into the fall months. Obviously, people aren't traveling as much, so I think the demand for that will kind of come down. But you also have to understand that constraint is going to continue to be there as long as Russia and Ukraine are fighting, and also that you have to also be mindful that there's also some key maintenance going on in Europe for pipelines, and if anything happens with that, that could make things worse and could prolong inflation at a higher rate than what it currently is. So with all that being said, yes, you're seeing inflation go down in some aspects. The demand isn't there. People are dialing back. We do have some, I believe it's some data tomorrow as far as retail tomorrow. I don't really weigh heavy on retail stuff. It does help as far as trying to determine where the consumer is at, and if they are buying, if they are fearful. Again, the market's so sensitive to rates right now that it'll be interesting to see where we go from here and see if they do come in at 75. Again, it's just right around the corner. We only got a little over 2 weeks before the Fed come out with their decision. But you have to also understand that the Fed have been front running. This is typically what happens going into a Fed meeting. About 2 weeks out, you have a lot of Fed members come on and kind of give opinions about stuff. The problem and what I've been talking about this whole time is July's been a very pivotal month because we've been trying to determine what's going on. Again, every economist came in wrong on this last core CPI. And so it'll be interesting to see, nonetheless, what happens here on this next Fed meeting. Again, very historical. Even if they come in at 75, I think you're still going to do a lot of damage. BABA even came out today, and they're laying off, I think, a third or something of one of their departments. And they completely tanked. OpenSea is laying off, I think, 25% of their company. So you have a lot of different companies with huge layoffs. Microsoft is continuing to plummet with what's going on with them, and they started doing their layoffs. So there's a lot going on, right? And everything is a delayed reaction. There will be fear. We haven't really sold, and that's something that is interesting. Is we haven't really sold, even though you're going to need a really big catalyst to break this. In my opinion, I don't think this is just going to hit and break. It's going to have to be fear recession. If they come out with a 100-point basis move, then you're starting to really strike fear into potentially breaking this. But if we get 75, the market's like, okay, well, 75 is 75, and we got currently 75 again sitting around that 38.50 roughly. So anytime we talk about 75 point, that's why the market's trying to push back up to that 75-point zone. But we do have a trend break, and we haven't really retested, so we could push back up to it only to sell off. So I wouldn't be surprised if we also have the 20 EMA daily get a retest on this. So we might get a pump overnight, hit that, and then start selling more. Again, this pump today, what saved it today was Fed coming out saying that, hey, no, we're good. So no worries on that. And so, again, talking about that, you have that cycle where the Fed are, 3 weeks out from the meeting, they start trying to pump up, this is good. This is really what's going on. No, we aren't even considering a 100-point basis move. And then they have a blackout period. So all next week they'll have a blackout period. You won't hear anything from the Fed, and then you have the Fed meetings where you actually get the numbers. So it'd be interesting again to see how this thing plays out. But nonetheless, sorry, I've been kind of skipping around there a lot. There's just a lot of different information coming out. Again, there's a lot of layoffs. If you have to again see what the issue is, right? Everything is about supply and demand. If there's no demand, right, you're going to start hitting stagnation, right? And so by driving up these interest rates, you're pushing away demand, right? Nobody wants to buy at that point. And so now you're putting major strain on these companies because now they have a surplus of supplies and they can't get rid of them. Nobody wants to buy them, and because they don't know what the next move is going to be. So they're not going to spend excess money on stuff that they can't afford if they are struggling even to maintain, just your basic necessities. And so with all that being said, the data tomorrow, the consumer data, I think will shift the market a little bit, and it's going to push the market one way or another. Again, I think we could potentially push back up to that 75-point basis move, and then going into next week could potentially start selling off in preparation for FOMC. Could have a little bit of rally. I know the market really wants to try to price in a rally, but it just hasn't had the chance to do that just because Fed futures and the Fed talking and data points have really been swaying the market back and forth in these crazy dips. It wants to rip, and then it finds getting new data points pointing something bad, and it starts selling again. So again, index, very interesting spots. Again, you're under the 20 EMA after the break. This isn't the first time we broke it either, but we've been flirting with 100 and a 75-point basis moves. The market's just been kind of shifting around this area. And we haven't really visited that 100-point basis move, which is roughly around the 36.36. Again, there's still another big drop. If that is what happens, again, tomorrow will matter where we land, always. And again, Bitcoin, I'm not going to talk too much about this. It's consolidating. Everything's in sync with the market. So just waiting for this. It's got a big downward channel. Again, once this reverses, we should be good. And it's still looking at that. The dollar in itself is continuing to be extremely, extremely strong. And even though that may seem good, it is not, because the rest of your currencies are hitting, 25-year lows. When has the euro been lower than the dollar? In my lifetime, I don't even remember that happening, right? Well, I mean, in 25 years it did happen, but I was real little at that time. I wasn't into all this stuff. So nonetheless, I mean, it's been a very long time with the yen and with the euro and all the rest of the currencies, right? Our dollar may be great and fantastic, but you have to also understand the impact. This is a global thing, and we have to understand that even though we may be isolated, we've established our own ecosystem to where we produce a lot of stuff, about 80% in-house, and 20% roughly we outsource. So being said, that's still we're still going to be impacted either way. So even though you may think we're okay, you're going to still see a pretty big impact of what happens going forward. And again, if anything happens with Europe, they're kind of handcuffed. They can't just raise rates at a crazy, ridiculously fast pace like the U.S. has been doing, and realize that the U.S. has been, interest rates for houses right now, I don't know what they're sitting at. I think they're sitting roughly around 5 or something right now. Right, and they continue to get pushed up. It doesn't seem that bad, but considering that you've come from, just under 2 just a couple months back to now over potentially flirting with a 6, right, is just absurd in such a quick time frame, right? And you frighten people when stuff happens at a fast pace. This is a statement I've always lived by whenever it comes to whatever you're doing or trying to convince a group or whatever the case is. You do it slowly, and you slowly raise the temperature, right? Because if you speed things up too fast, you're going to boil that water too fast. It's going to be blatantly obvious, and then at that point, you start to hit panic. And so that's what we're seeing with these interest rates: is this the boiling water is boiling too fast, and it's not. Well, you have to condition something like this into the market. You can't just force it. You start forcing it, you cause things to break. You cause things, and that's essentially what we're doing at this point. So, again, the dollar is still very strong. Really interesting to see what happens going forward with that. Oil's sold off quite a bit today, which is good in a sense, in the sense that we are going in a descending wedge here. So just be mindful of this thing, and we are at a very strong support. So this thing could start really, really ripping here going forward. Just again, all depending on. I think this could potentially lead into the Fed meeting, right? I think if we can get some sort of rally next week, could potentially get us to the point to where we start coming back, we push down into the Fed again. But we'll have to see how that plays out. Some of these line up almost perfectly on the technicals. I say don't always play technicals. Again, I play day to day, so these flushes are huge during the day, but in a larger time frame, it just pushes right back up, and it's getting ready to rock and roll. So as an investment standpoint, it's good to look at the higher time frames, not so much the lower time frames. Again, I manage everything on the 1 hour. I could typically dive down on the 15 sometimes, but I still feel it to be a little bit too wiry down there, and that it's better to get a higher view on things than to drop down to that lower time frame. So with that being said, we'll look at the regulars here going into tomorrow. Tesla, again, you got a big wedge here. It's looked like it tried to break, and now it's trying to run. This one could potentially run all the way back to 761 tomorrow. So if this holds flat or gaps up tomorrow, I think Tesla could be a nice runner tomorrow. Again, trying to get some kind of pre-earnings run into next week. The premiums are really going to be built up a lot by next week. Again, it's reporting on the 20th. So I want to keep Tesla on watch tomorrow. Could have a nice little run going into there. If the market holds and we don't get any bad data tomorrow, I think that'd be enough to give us a little bit of rally. I think the market wants to build some sort of cushion going into the Fed. And then also Amazon, you're getting a lot of these wedges that are trying to break out. If it gets above essentially the 113 mark, could potentially run there as well. Shop. Oh, one thing I want to bring up is Google is going to have their stock split tomorrow. Their 20-to-1 stock split. So you'll wake up tomorrow and this thing is going to be a fraction of what it is right now. But Google could be potentially making a higher low here. It just broke the 20 again. Again, if you get a retest here, you're going to get rejected hard. You got a couple of setups that are like this, so kind of want to keep this on watch. I think if we do get momentum, this thing could really start ripping. Is a higher high here, could potentially be a higher low, could possibly mean we could be rallying. It really depends. Again, any rally is going to be short-lived. I wouldn't buy heavily into anything if you're looking short-term, but that's just my opinion. NVIDIA, again, very interesting. We do have it looks like we're getting a break on the daily. So tomorrow this thing might actually start running. I want to keep this on watch, especially with TCM doing so well. We could potentially reverse. I mean, I try to play all angles, and this is why I do daily updates and I stay with what's going on daily because of that fact. Like, things change very, very differently. And even though things seem really bad, again, if everything is just bad, people are going to normalize to the bad. And then if there's you come in really shitty expectations and you hit expectations, then it's fine, right? And the market will take that as a plus. You provide the market with some sort of hope. And that's kind of where we're getting at that point where if there's any kind of hope, we're just going to run. And so could be a really good watch tomorrow, watching chips. I think chips will have general strength potentially tomorrow. Again, JPM, we definitely want to watch. The banks gap down. This is my concern, is the banks are really going to drive the index. So you got to be really careful on this. I think we could rally tomorrow, maybe enough to get a rally for earnings, and then realize that as soon as we tap that 111 again on JPM, I think we're going to just bottom out and start really selling off. That's my concern. Going forward, it did hit the bottom channel nicely and bounce off of it. So we have to see if we do tag that and just continue to sell off, or we gap down and continue to keep selling off. Again, Goldman Sachs is at support here. Bank of America, same thing. It broke support. Now we're looking to retest it potentially tomorrow. Could start really selling at that point. So that's pretty much what I got. I don't want to put too much time into this video because, again, we do have some data set in the morning that's at 10 o'clock. Again, give you some results as far as the consumer. It will be important to kind of see where the consumer is gauged. I think right now the market is more heavily concerned about how big of a rate increase the Fed is going to have on the 28th. And realize that the core CPI, it kind of just blew everything else out of the water. Any other data set, we had data today, but it really was meaningless. The market didn't really care. Yes, you're going to get a very short-term move in that first 30 minutes, but aside from that, that's about it. And then the market will just continue on its way. The thing that holds more weight here is the core CPI, and that's what the market goes off of, and trying to gauge where the Fed's looking at. The Fed's trying to project how bad inflation is going to get. So it's not so much what's happening now, but okay, well, if we came in at 75 and it didn't help it, right? Can we come in at another 75, or maybe we should even go 100 and see if that's going to prevent inflation from getting worse. And so, again, a lot of different things. The market's very sensitive to Fed futures right now, and trying to determine where we're landing, how much of a chance we got hitting that 100-point basis move. Again, we hit that 100-point basis move. I think you're going to just start driving fear in the market. maybe people, again, it really depends on the markets, right? This is why I said, like, you have to let the market digest it, because maybe the market's like, okay, well, we hit on a point basis move. Maybe that's peak. Now we've hit peak. Maybe the market will take that as a positive. I don't know. Again, the market isn't what you interpret it to be. It is what it is. You have to go off of it. That's why I wait for the action before I jump in, as opposed to it being flat and then guesstimating what it's supposed to be. And then, you have run that 50-50 chance that you're wrong. So it's better to let the market decide for you than take position after. So with all that being said, I appreciate you. Go ahead and drop a like button. Until next time, I'll see you guys later.